Greetings everybody, let's keep up with the analysis of the gold market. Sive is here with the ForexPeaceArmy.com. So, actually, honestly speaking, on the technical side, we can't do too much on the daily chart. The one thing that I just can do is adjust the levels that we have, because thrusting action is not stopping, it's just keep going. Now, another level that we could keep an eye on here is 49.15, but nobody tells that it will be the last level. So within the couple of days, maybe we will need to update it once again. And in general, market stands in such an environment where we have to pay more attention to external factors and news rather than by taking a look at the technical picture, because the technical picture, at least on daily intraday chart, has now very limited application. So what I'm talking about, first of all, of course, the Fed meeting, it will be interesting what Jerome Powell will do on the background of this confrontation with Donald Trump, and actually what the statement will be. But another interesting moment is the strike on Iran. As I explained in today's video on the euro currency, I think that it has really big chances to happen. Although for the gold it might be a supportive factor, but maybe it's even rising because of the expectation of that. Probably some information has leaked in the public space, and it's already starts pricing in, and you do not need to be a prophet to understand that probably this will happen. It's a different question in what degree it will happen, so the strike might be different, but the fact of the strike probably inevitable. It's just because, well, by two reasons actually. First is because the United States accumulated so much power in the Gulf that they just can't strike, or they just lose their face. So you have prepared the big military objects, but hasn't striked, and it's it will be treated like the signs of weakness. Second, dollar is going to hell, so it's just falling and falling, and actually United States needs to switch the attention of the investors for something else, trigger the demand for the safe haven to stop this tendency. That's also might be the reason. So I think in one or other degree, but strike probably will happen. And now it might be, let's so call it as a gentle strike, or some kind of the vision of the strike as it was previously, or it will be really serious mess. It's difficult to say, but I suspect that until the end of the week, it's a very high probability that this will happen. Now on lower time frames, on the 4 time frame chart, I do not see what we're gonna do here. Markets going higher, we do not have any patterns. Here's just the levels that we could keep an eye on, where theoretically market could pull back. The one thing that we could do, it stands mostly on the hourly chart, and it's very short term, which I think that it is good, because when you expect so big events, you probably do not take a look at too extended targets and too extended patterns and heights and time frames. So better to act fast. So what we have, first of all, returning back to the yesterday's setup, it has worked as it should. So we said keep an eye on market will be able to hold lows of the week. Be prepared for immediate upward action. Here's market has formed hand shoulders pattern, and just keep going higher. Very similar to what we have on the euro currency. On the euro currency we have even a bit better situation, because at this point on the euro currency we also have grabbers on a 4 time frame chart. That was an additional pattern. Here we do not have grabbers, but the shape on the hand shoulders, it's very accurate, and actually maybe some of you have taken the position with this pattern. Now what we could say, actually just stay focused on this most recent thrust. It is suitable for a bread and butter trade again. If retracement will be for the 52.10, that's the first level to watch for. This might be some at least minor pullback. That's another level to watch for, which is a 51.50. There's two levels that is good for momentum trade, for possible retracement here. That's the only scenario that I see that might happen, and then just we need to see what will happen next. But currently, obviously, we're not considering taking any new shorts. For long positions, we don't want to take them on top, so we prefer to get some pullback, something like this. So once again, rally, minor retracement, taking position, go. Rally, minor retracement. So we're just following the same plan that we already discussed in details, and I do not see the reasons why we should abandon it. So it works really nice, so that's why let's just keep going with it. That's probably enough for me for now. Let's see what will happen. Keep an eye on the Fed, guys, and see you tomorrow.